Welcome back to my channel. In this video, I want to cover another super investor by the name of David Katz. And David Katz is the founder of Matrix Asset Advisors and professionally manages a number of ETFs. I'm going to be looking at their ETF that looks at large cap value stocks and see how the performance of that fund is going, see things that I can learn from a professionally managed fund. This is a long list of stocks in this particular fund, and I'll take a look at the year-to-date performance, looking at how all the stocks that are listed have done so far in 2025. Now, this investor is less known to investors. I don't know a whole lot of him, but he's been on CNBC a number of times, and his firm has been around for close to 30 years. So he is somebody who has a lot of experience. Now, let's take a look at his fund, the performance, and the opportunity for investors that want to have an ETF, potentially to look at this ETF or ETFs similar to that. As I look at this ETF, keep in mind for some investors, this is a really good idea. You may be new to investing and you want to maybe accumulate some capital. You're really in the middle of your good earning years. You really want to focus on your career. You're really busy. Maybe you have a young family and you don't have a lot of time. ETFs are a good idea. I'm not saying specifically this one's a good idea, but I'm just saying the whole concept of an ETF totally makes sense. I invested in ETFs and mutual funds when I got started, and it was a really good idea. Over time, as I got more experience and knowledge, I was able to go into individual stocks, and that's where I prefer to invest now, is mostly individual stocks, although I still own a few ETFs. Let's take a closer look at Matrix Asset Advisors. So the specific ETF that I'm going to examine is the Matrix Advisors Value ETF, symbol MAVF. And this has $63.77 million of assets under management. Year to date, it's now down 9% on the ETF level. Then you have an expense ratio of 0.75%. Let me show you individually all the holdings and the performance year to date for this particular ETF. So let me look at the individual stocks in this ETF, and they're listed here. And we've got some big cap stocks in this ETF. Companies like Microsoft, Alphabet, JP Morgan. You do have some smaller caps in there. US Bank is in there. Tyson Foods, which is a small cap, as examples of the smaller caps. Now, just to point out some of the winners for this ETF, you've got the best percentage winner is American Electric Power Company. That's doing quite well. And the second best winner from a percentage standpoint is Tyson, which is a staple. And staples have been doing well so far in 2025. And then in third place, Medtronic, which is a med device company. And there's a lot of red on the screen. Now, a lot of investors are down this year. So it's not necessarily this one's the only one that is in the red. But some notable, some big depreciators, the biggest one being Generac. Now, this one probably worked when there was a lot of hype around power generation, but now it's down 27% year to date. Ouch. Another one is FedEx. Yeah, that one, industrials around logistics, they've just gotten hammered. And then another one I'll point out is PayPal. And I feel their pain on that one. I own PayPal. So that one's also down for me. So there's a lot more red than green. And overall, this particular ETF is down 8.94, which isn't all that terrible. You need to consider there's a management fee as well. So if you add the management fee, if I were an investor, as an example, I'd be down 9.69 collectively. Now, the S&P is down minus 6.14. So the fund is underperforming the S&P by a little bit of a margin, almost 3% as a whole. So that is underperforming the S&P. So where does David Katz rank? Well, I've so far have looked at 16 super investors, and these tend to be the more popular ones and the ones that have come up as I do analysis. And he is in 12th place out of 16. He's right behind Bill Ackman and right ahead of David Einhorn. And, it's a tough year. My favorite investor, just because I learned so much from him, is Pat Dorsey. And he's second to last place as an example. But David Katz is underperforming the S&P, and he's underperforming at least 11 of the super investors that I've taken a look at. The one thing I would point out is I'm glad that I'm looking at super investors because I'm learning how professionals manage a portfolio, just walking away with a few bits of knowledge and maybe an idea or two. But you see that it is difficult to invest. A lot of great names like David Katz, Einhorn, Pat Dorsey, they're underperforming the S&P. So it's not every year that they're going to beat the S&P. So it goes to show that, hey, if you're having a tough year, don't get too down on yourself. Even the pros, have years where they lag the S&P. The second thing is, as mentioned earlier in the video, early in my investing journey, I was trying to accumulate as much as I could of my savings. I was working and just trying to accumulate as much as I could. And early on in my 20s, especially, I didn't have a lot of knowledge and experience investing. So I went with ETFs and mutual funds. And over time, just became more comfortable, more knowledgeable, and went predominantly into individual stocks. And part of the reason I would do that is when I would look at my statement, I would actually see that the market was performing at a certain level and the funds that I owned were down here, like they were underperforming the S&P, and I was paying a management fee. So it was kind of a double negative. I'm buying a fund from somebody that isn't beating the S&P and I'm paying them to underperform. So I'm like, well, maybe I could start to learn and become a better investor. And I don't have to pay somebody a management fee. You consider a 0.75 management fee, you may think, well, that's not a whole lot. Maybe on $100,000, it's $750. Well, that's not a terrible amount. But if you're successful, maybe you accumulate $1 million, it's 7,500. That's a pretty nice little vacation. Over 10 years, that's $75,000. And if you let that money compound, maybe it's worth more like 100, 125,000. That's real money. And more importantly is investing in individual stocks enables you to grow your knowledge, your experience, your skill. So by the time maybe you reach to an older age, I'm 56 as an example, you have the confidence and you have the ability and the skill set to really invest and make your portfolio really work 24 hours a day for you to provide the wealth that you want to have, the income you want to have for yourself and the people you care about. So that's one of the recognitions that ETF investing most definitely is a good idea, especially for beginners or maybe somebody that just doesn't want to manage individual stocks. Maybe they want to have a very peaceful retirement. I totally get that. I'm not going to argue against that. But if you're the type of investor that I am, which is it just didn't reconcile that I was paying somebody to underperform, I just really got tired of that. So I went to individual stock investing and I've never looked back. I'm really glad I did so. I'm more knowledgeable. I'm more empowered. I'm glad I did it. So that's a review of David Katz and his ETF. I think he's a sound investor. I think he does a great job. He really tries to get the right return for his investors. And I'll be keeping up with David Katz throughout this year. One note on performance, I try to reach a reasonable measure. I look at the stocks that is in the portfolio and I use the assumption that those stocks existed in the fund at the very beginning of the year, and then I measure year-to-date performance. The fund's probably moving stocks in and out. The positions are probably changing throughout the year. So my numbers are probably not exact to the dollar, but they're, I would say, roughly on target. They may be off by a little bit, but I'm using the information that this particular investor reported to the SEC in 13F reports, and that's the best information that I've got to work with. So thanks for watching. I appreciate it. If you like content like this and videos on stock reviews, consider being a paid member of this channel. I'd really appreciate the support, and you'll get a lot of really good perks. More information is provided on my homepage of the YouTube channel and on the description of this video. Thanks for watching, and good luck with your investments.